Welcome to our weekly market updates. Following last week's better than expected unemployment rate and this week's revision of the activity indices in the US, the mood was rather risque. However, with the elections approaching, Trump has to be more creative to reduce Biden's lead. Earlier this week, Trump crushed market expectation by postponing any additional stimulus to after elections. But he came back in the game with a new proposal to try and beat down the Democrats' lead. By lowering the total package to below $1 trillion in favor of small businesses, airlines, and households, he will satisfy his electorate and put any failing vote on Democrats. What's more important is that Fed minutes indicate that it will be ready to increase its bond purchase program in case need be. This is significant because whoever is elected, American debt will anyway surge. Biden has the more ambitious investment program amounting to $4,000 billion over 4 years, in addition to a greater stimulus package compared to that of Trump's. The total balance sheet of the Fed increased by more than $3 trillion since the beginning of the crisis, which has mainly been invested into bonds maturing in less than 5 years, with only 20% being directed to the 10-year and more maturing bonds. Such an increase in the amount of debt in the US would put pressure on the longer end of the US yield curve and on the USD. The worst-case scenario, with a balloting election, is moving away as Biden's lead in polls is substantial, giving some support to the US equity markets. Current expectation is a gradual increase of stimulus with additional support from Fed and an increase in inflation. Good for equities, but bad for longer-term maturing bonds. The current laggard in polls could be tempted nevertheless to try to dominate the headlines, bringing back some volatility again in the market. The ECB also asked for an additional fiscal stimulus as the outlook gets darker for the fourth quarter. The recovery in Eurozone faded in September and a second wave is further threatening. Since activity rebounded in July, the momentum currently decelerated and services contracted in September. Services account for 2/3 of Eurozone GDP. In the meantime, the ECB is unwilling to provide additional monetary support. Eventually, a month away of the presidential election, Food and Drug Administration in the US is thwarting Trump's willingness of a vaccine prior to the elections as they delay any approval by more than 2 months.